In the continuing saga of GameStop, we have some people that are very upset about what has happened recently. So things got kind of quiet on the GameStop front. Recently, there was a run up in the stock price in anticipation of the earnings report, which came out favorable, although there was expectations that Wall Street had that GameStop didn't meet particularly, but they have successfully turned the business to profitable. But at the same time, they did something that I think a lot of people didn't expect, although I'm not sure that they shouldn't have expected it, where they are intending to raise more money. And they're doing that by diluting the stockholders again. And this has happened multiple different times in pretty rapid succession, and there's starting to be quite a bit of fatigue, malaise, and general upset that it seems like what GameStop is doing is, instead of allowing all the people who have invested in GameStop to participate in this thing that's been colloquially known as the MOASS, to not participate in that, and they're sort of raking all the cash in and then not doing anything. It seems like, I don't know if they're investing in T-bills or just sitting on this dragon's word of cash, and really not telling anybody what their plan is at all. So it's kind of a interesting situation that is developing here, and I think it'd be fun to run it down. Lucas, how well are you paying attention to what's going on with GameStop?
Well, not maybe fairly well, but I haven't drank the tea. What you said a MOASS? What do they mean when they say MOASS?
The mother of all short squeezes.
Oh, that's right, the mother of all short squeezes. So what is going on with the shorting of GameStop? Have those uh, market makers that we talked about the registering of stock and possible perfidy that was going on uh, with the with the shorting of GameStop stock back in 2020, and then some of that coming due earlier this year back in June. Did those people get squeezed out, or did they lengthen their bets?
There's been interesting price action. Very recently, GameStop ran all the way up to $60. It had this just insane run where the stock price tripled within maybe a couple days. And then it fell right back down. And these are things that we've seen in GameStop before. Like, we've seen this sort of weird price action, and it always gets dismissed because the media will say, oh, it's because Roaring Kitty posted, or it's because Ryan Cohen posted, or whatever, as if retail had the ability to move the stock around like this. Um, it's disingenuous. It doesn't seem real. So I would say likely the situation that GameStop find itself in with the short interest, it has not been resolved. And that's part of what is being discussed here, is that GameStop and Ryan Cohen, the CEO and the chairman of the board, seem to be letting these guys off the hook by continuously creating new shares and then selling it off and allowing them to unwind to their positions without having this mother of all short squeezes actually occur. So the interesting thing here to note, or the thing that we should talk about first, is just what happened with GameStop's charter. So the charter said that they were authorized to issue 1 billion shares of common stock and 5 million shares of preferred stock. That is not a small number. That is, look at this. So they had 300 million shares. I think we're up to like 440 million at this point. But this is a massive dilution. You know, if you were holding a share and there were this many at the time when you had bought in, and they put out a billion new shares, you're going to be massively diluted. You're going to have like a third of your position, and I mean, GameStop is going to collect up all that cash, and they're sitting on right now, which is an eye-popping $4.2 billion in cash. They have a price to earnings cash ratio that beats almost any company that exists in the S&P 500. There is no other company that has no debt, this amount of cash, and is profitable. It's wild. Like, there are so few companies that actually meet this profile, and it's what they've said is that they are now going to raise even more money. So if we just run down what's happened recently, I've got a few of these pulled up. So on May 24th, they completed an at the money offering where they raised $9.3 million. Then, short on the heels of that, in June, they did another offering where they sold another 75 million shares and they raised another 2.1 billion. This is where we got to the 4 billion. And this is the thing that's happened recently that has just got people up in arms, because here we are just a little while after this, right? Which we're in August. So remember, we were May, June, and now we're in August, and there's another 20 million shares being offered out there. So even though they said they were going to sell another billion, this seems like what's happening here is GameStop just keeps selling shares, letting shorts close out by creating these shares that they can use to close their positions, and never allowing this short squeeze to actually occur. Meanwhile, they're said that they will never tell anybody what they're planning to do with the money, what they're doing with anything. And we've had cryptic tweets like this from the Roaring Kitty, where it seems to allude to him throwing away CHWY. Maybe like nobody really understands what this particularly means, and now he's going to get ready to play with GameStop again. And the sentiment that's out there about the situation, I think, is pretty well summarized on this Reddit thread, where under Superstonk, people have been talking about GameStop for a long time and sort of the due diligence and things that they found. And if you look at the sentiment here, it's mostly just people being very, very mad about the situation and saying, I'm kind of over this and I'm out of the, being a long-term investor in this and getting out.
Well, that's interesting. Interesting. When I see that graphic from Roaring Kitty, and Roaring Kitty is not part of management, not part of GameStop, is he? He's just
Yeah, he was just an analyst and an investor. The one that they did the Dumb Money movie about, the one that our friend Ian Carroll is doing another movie about called The Bear Trap. So yeah, he's just an investor, just a guy that saw GameStop, thought it had value, and that it was being overlooked by Wall Street. So yeah, he's not part of the management team. He's not involved in the company in any way other than he's just a very enthusiastic investor.
well. So there's quite a few things that are going on here that it's going to be interesting to see how this plays out. I think it's pretty obvious that GameStop has a business model, a traditional business model that no longer works. I mean, what
Oh,
is
you mean with just like selling brick and mortar retail video games?
Yes, and part of the narrative that you heard from GameStop investors, especially from 2020, was no, there's something still in brick and mortar. There's nostalgia. There's real world, but the PlayStation is coming out today. Does it have an optical disc drive? No. Do we live in a world of gas fees? I mean, it's as if there's a bunch of degens who are yearning for Ethereum and buying ETH, and yet the world is moving towards lower gas fees. And it would seem that the management of GameStop certainly understands that and is looking for a new business model. To me, when we have, and when I talk about gas fees and traditional companies, traditional finance like this, I'm talking about the FOMC and the expectation of lower rates. With meanwhile an ever growing amount of dollars that exist in the world that are being passed around for T-bills. So I would guess that the management of GameStop sees and understands that and is thinking we need to be pivoting and we need to become something more of a financial institution. And you mentioned their charter earlier. I know that there were some votes and changes to the charter. Did they give GameStop permission to engage in, I don't know, but in financial gains of expectation with their massive war chest with all of the dollars that they hold.
They did. They authorized GameStop to make investments according to what was written in the charter, and we can pull that up, but they absolutely authorized that sort of activity. So they can do it, and it's obvious that they're going to do it. And I'll pull up some evidence of that so we can take a quick look. As far as new business models, so GameStop has absolutely participated in a bunch of different things. So for a little while, they created a wallet. They did some stuff with NFTs during the NFT craze. They wound that down. They've been selling cards that have some tie to crypto. So there are like these special cards that you can get that there are some of them that have like a whole Bitcoin in them, which is pretty wild. So people have been buying those. They've also gotten into collectible cards and card grading. And another thing that they've done recently is they open these retro video game stores where what they're doing is selling like old video games, or in some instances they're selling branded retro gaming consoles that are new. So not just like old stock, which they've been doing for a long time. Like you've always been able to go buy like an old video game system at GameStop, but now they've specifically started branding stores as retro gaming stores, and this has happened pretty recently. So there have definitely been business models that they have explored, things that they've tried to do, and this is one of the most recent ones. But famously, Ryan Cohen has kept his cards pretty close to his chest. When we hear any information from Ryan Cohen, it's usually pretty cryptic. He posts some things to his Twitter feed. They notoriously have not provided any guidance during the times that you would traditionally hear from a CEO or from the management team, which would be at earnings time, during press releases, whatever. They famously said, go read our 10Qs, anything you want to know, like we've already published it, and we're not going to say anything differently. So it's not entirely obvious what they're planning on doing, but amassing a hoard of cash like this, there seems to be some kind of a plan with respect to mergers, acquisitions, or something that will cause GameStop to become a larger aggregate business and to explode the whole thing out. That's been the idea and the thesis, and I don't know that that's in any way been put to rest. As well as there's this timeline that has been put out where it seems like it's pretty clear that we're somewhere in this whole situation, that we're nearing this whatever this explosion and this clinking of glasses is. It might be a little hard to see that, but like the emojis kind of run down like this, that there's something to do with the dog, and maybe that refers to this post where dog's been dropped, and maybe that's where we're at. And then something about the election, maybe that's what's going on here. But yeah, that we're somewhere around here in this whole MOASS timeline, and that we're not quite at the point where we need to be. Now, this is a little bit old on 3 months ago, and this is just somebody's speculation about where we're at. I've actually seen people say that we might be at the fire point or whatever. So it's not entirely clear exactly where we're at on this idea of this emoji timeline, but somewhere post 27 to 30 is generally the consensus of what people are thinking, according to what Roaring Kitty posted with this very cryptic timeline.
I love the community's following of Roaring Kitty. I think Roaring Kitty is also the greatest meme lord who exists on the internet today. I know of no greater. I love his post, and I find it fun to. He's the new Agatha Christie. But we keep mentioning CHWY and this dog and Ryan Cohen, and I think it's also important to consider what Ryan Cohen, who is the CEO of GameStop, but before he was CEO of GameStop, was the CEO of CHWY, which is why we keep mentioning that. And he took CHWY and made a company that is I don't know how we abbreviate or describe it, but is maybe the Amazon or maybe the Patreon of a cross between Patreon and Amazon. but delivers dog food. And so, it takes like some sort of notion of recurring grocery, and so that's what he built in Chewy. And so when I think about what his instincts might be, or how he was able to make a very successful company with Chewy, that does have a business, like, that does provide a service and provides value in the world that we live in today, of people not wanting to go to a grocery store. I mean, think about what Chewy does in relation to a retro gaming store. Like, those don't seem to be very congruent to me. An understanding of people wanting things delivered to them and wanting things on the regular is probably what Ryan Cohen is going to be looking as a more successful business in the future. So when you mentioned that they've ventured into crypto, that they're exploring in crypto, I also think about the move towards gaming away from the physical media, CDs, DVDs, whatever, and drives, and maybe GameStop is positioning itself to be a marketplace for games, like something to rival Steam. I don't know, or they could be moving in something more traditional, like a more traditional finance company, and being something more like a Berkshire Hathaway.
Well, that's been speculated that they may be transitioning into something like that. There are ties between Ryan Cohen's other businesses. You did mention Chewy. There was famously this time when Ryan Cohen was dabbling with Bed Bath and Beyond and had offered to buy it and wanted to take over the company. And these are all like retail companies that had been targeted by the same folks that tried to gut GameStop and to destroy it and short it, and then abscond with the money they made. I thought that this was another interesting point to bring up, and it backs up what I had mentioned about the price to cash. This is kind of unheard of in the world of most companies. Is like you usually don't have a dragon sword of cash that you sit upon and start to build your business with. And GameStop has successfully turned their business around in a very like shocking way, I think, to Wall Street in respect to how they've managed this entire situation. They've taken the company from being net losing on a per quarter basis and having a substantive amount of debt and poor performing stores. They've closed a lot of the poor performing stores. They've retired all of the debt. They have gotten out from underneath the restrictive covenants that they had with various banks, and they're now sitting on this dragon's hoard of cash that they can do whatever they want with. There's speculation that Warren Buffett has sold off a substantial amount of stuff because he's anticipating that the entire stock market is going to go down. Like if you've watched his moves of recent, he has substantively moved most of his treasury into a cash or cash equivalent sort of position. And it's not obvious what his next move is unless he's anticipating a big market shortfall or like a big drop in price in the overall stock market. And if that was the case, then he'd be in a position to buy up things for pennies on the dollar, dimes on the dollar, whatever it ends up being. And if Ryan Cohen is sort of following along with that, then he might be positioning himself to go purchase quite a few things and do a lot of M&A work. So it's speculated that actually might be the case and is absolutely authorized by the charter updates that happened with GameStop. I think it was this year.
And maybe that's going back to those tweets and the American flag and the speaker. Maybe that has something to do with the election and expectations with how the stock market is going to form up after the election, with expectations as to what's going to happen. We've seen a lot of talk about AI, NVIDIA, Apple, Google. We've also seen threats in regards to antitrust cases with them. Something else that comes to my mind is Patreon, the Patreon business model, and sort of like more general trends that we've seen in the last decade, the last 20 years. And I'm thinking about the sharing economy, and moves more towards the sharing economy. Amazon has been king for quite some time, but the Amazon that I fell in love with 15 years ago doesn't seem to be the same Amazon today. The Google that I fell in love with in 2004, likewise, what used to be a search page that didn't throw a bunch of ads at me around the search bar has become and had text ads at the search results is now just like pages and pages of ad driven results. And when I go to Amazon, I don't get a whole bunch of options from disparate sellers offering a whole bunch of options. I get all of these. I get a bunch of Amazon related merchandise thrown my way. So maybe Ryan Cohen is looking at what has happened, especially with Amazon, and thinking about what he did with CHWY, and thinking also in terms of the entertainment sector with GameStop. I don't know.
Well, I think one thing we could do to dissect this a bit and try to get at the mind of what Ryan Cohen's thinking about is just to look at his X feed. Like, he definitely says stuff. And as far as, what they're hiring for, he sometimes will post about job positions that, he cares about, wants people to apply to. So here, most recently on September 9th, we had a posting about an omni-channel engineering lead and a Salesforce Commerce Cloud engineer. Then something about graphic designers. But the one that I think
you scroll by Biden's Weekend at Bernie's. That was
I did. Yeah, it's funny. And then there's some more weird stuff in here about like this. Like, what is this tweet supposed to mean?
I think he might be a Trump fan.
Well, these things are always super cryptic and they're weird to dissect because you can infer lots of meaning in these things and people sleuth them out. The one that I wanted to call out, though, that I thought was pretty interesting was they had called for an investment person. Let me see if I could pull that one up quick. That they were looking for somebody to help with managing their treasury or investments. I thought it was higher up. Yeah, it's going to take me a minute to find this one.
Well, it is actually interesting as you're scrolling through his feed. I actually look up Roaring Kitty's Twitter page every now and then and see what he's saying again, because I think he's it's like reading Agatha Christie today for me. But he's actually pretty. He seems sort of authentic and replete in what he's posting, not some guarded, curated, conservative Twitter page here. So
I can't imagine that he would have deleted this tweet. I know it was pretty big news for a little while that they were looking for somebody help with managing their treasury. Okay, give me a second and I'll find this. Like, I know I have notes on this somewhere, so give me a second. I can't believe I didn't have this. I thought it would be easier to find it because I thought it was just right there on his feed.
Well, go ahead and look for
But
it.
yeah, there's been some fun stuff in here with respect to politics. Ryan Cohen's definitely wearing his heart on his sleeve with respect to some of the things that are happening in the world of politics.
Yeah, that's also maybe. Also, it's also nice and refreshing to see a CEO who has a sense of humor and is posting memes. Weekend of Biden's. Hey, by the way, did you have?
Now I can't find this at all. I wonder if this tweet was deleted.
Well, keep looking for it. Rusty, did you happen to see Biden put on a Trump hat yesterday?
Yeah, I saw that. It was just a real quick put it on. He put it on over the hat that he was already wearing. So
Well,
I didn't think it was as big of an incident as people are making it out to be. But yeah, I definitely see that. I could almost see it as he was even more confused and just going along with the motions than really knowing what he was doing.
Oh, I think he knew what he was doing, and I think it was a I think it was a dig at Kamala Harris. So, but um, anyway, I was shocked. I was shocked that he put the hat on, and that he smiled for a picture when he did it.
Well, it would be interesting if Biden came out here towards the, um, you know, end of the election or when the election is getting ready to come out and starts to, not become so pro Kamala and starts to become negative of her. I remember there was a statement that Trump made in the debate that he said, Biden doesn't even like you. And and so it would be interesting if a lot of new information started coming out where that became, more mainstream.
Yeah, that
So so here it is. I found it. The reason I couldn't find it on a Twitter feed is because it wasn't on there. It was actually posted to LinkedIn. So yeah, here they had posted this position for doing global treasury, and you can see there's a couple skills that were listed off: FX hedging, SAP, ERP, some other stuff that they had wanted in here. So I think that this post job that they wanted to fill was related to managing that dragon's hoard of cash that they've been able to amass so far, because they need to do something with it and put it to work while they wait for whatever sort of market conditions are ripe for doing whatever they're planning on doing with M&A or other mergers or things that they might engage on that have been speculated about.
And you said they had what size of a treasury? Billions and billions of dollars.
$4.2 billion, I think, is how much they've got in the coffers right now. And if they complete this at the money shelf offering, which was authorized or that was discussed the other day, and some have speculated that they're going to announce like within the next day or two that they've already completed that, that they'll then have 4.6 to 4.7 billion dollars, something on the order of that.
It also would seem that there is an allegiance towards retail shareholders or to I don't know, smaller shareholders. So with the dilution of the shares, that large of a treasury, and um, I, don't- I would also say just like more largely like associated with both the election, but also we're coming into in reality. I mean, look at the Trump's talk about tariffs in the world, about regrowth of the American economy, and I do think that we are moving to maybe a less globalist world, a time in which we begin to make more things in the United States and become less of a finance driven economy, because we also see so many other countries who are getting out of the denomination of the dollar. So possibly they are looking to again to be something more of a Berkshire Hathaway, to be buying up various companies and
Or a micro strategy. I mean, I honestly, as somebody who's a fan of the whole Bitcoin treasury model, I'm a little surprised that they're not going this direction. I mean, it's a fairly obvious play if you have a substantive amount of cash. I don't know that putting your money into T-bills is the best idea. It's certainly a short-term play. Over the course of a couple months, it probably is going to be okay. But long-term T-bills is probably not the right thing to do with your treasury management. And this post actually talks quite a bit about what might occur with the actual dilution of the shares, that this might not be that bad or that this might turn out in favor. And I mean, certainly when they raise this money, it's not like this money is gone. It's not going into Ryan Cohen's pockets. It's not like the board of directors is absconding with the cash that's been raised at the expense of retail here. It's more, okay, it's now on the balance sheet and everybody still owns the company. So even if you've got a dilution of your stock, you don't have a proportionate amount that you did before, you still have value within the company with respect to that money that's on the books is part of what you own as part of the company. So if you're a shareholder in GameStop and they have $5 billion in cash, which whatever point they complete this at the money offering, the shelf offering, the next 20 million that they're putting out there, they're going to be somewhere in that range of 4.5 to $5 billion, depending on exactly what price they get for the shares and what have you. That you own a proportionate amount of that. And so if you just do the math on this, it's something like $9 to $10 per share is just in cash. So if you look at the true price of GameStop right now, if you buy it for $20, $10 of that $20 that you're paying is just like buying money, because that's how much money they hold on their balance sheet. I mean, it's not like you can get that money, but it's a way to think about it, because that much cash is sitting there. So what's the residual value of GameStop if you think about it from that perspective? If you have another dilution of 5% or whatever, and now you have an additional $1 or $2 of cash per share that you have a portion of, it gets muddied about whether this is a bad thing or a good thing or what's really happening here. But it certainly doesn't seem like this idea that we were going to go into a situation where there would be phone number digit valuations on GameStop, when or how that's going to occur if we keep selling shares into a billion share hole, right? Like, how much short interest is there really? Like, if that's right, and there's, I don't know, billions and billions of short sales that have occurred, then this is a drop in the bucket. But if not, then it's building the company and you're a long-term investor and you believe in Ryan Cohen, okay. But if the idea is that you're going to have a MOASS, some people are starting to say, well, how can that occur if we keep allowing the shorts to buy up these shares and you keep making them? Like, how is that ever going to happen?
And if you had, I don't know, would you rather be part of a MOASS, or are you more interested in a long-term company? Because I would also look at this narrative of MOASS and say we're headed towards, again, going back to the FOMC, we're headed towards cheaper interest rates with the dollar, and so it would be harder to it will be harder to squeeze out short sellers whenever debt is cheaper for them to accumulate, and so I would imagine abandoning that expectation of MOASS should be what investors are looking for, and finding some other method of or some other identity as a company.
Well, in some ways, a MOASS has already occurred. Maybe not mother of all, but if you look at the price going from something like $1 to $400, there have been very few stocks that have ever occurred any kind of price action anywhere close to that. And this is the time when, famously Robinhood, was shutting off the buy button, and we had people going to Congress and all this stuff. And if you look at the price action, it's been kind of this steady decline until you had this kind of weird stuff that's going on, which is what I was talking about, where, we see these massive spikes in price up to, 50 something dollars. Like, these are not retail interest. This is, weird situations where somebody is no longer able to hold their short position, has to close out, and then something weird occurs. And you can see that sort of there was this upward action of just like massive things happening. And it just so happens to coincide with that not really occurring, because there was that at the shelf offering, here was that other at the shelf offering, and it seemed like it stopped these things from occurring. And there's been speculation that maybe, GameStop's been working long term to sort of bring light to all the stuff that's, been errantly happening with this stock, because they certainly have a purview around how much stock has been directly registered, sort of what they see when votes happen. And they haven't been real public about any of that stuff, but we have started to see a lot of action from the SEC with respect to companies that seem like they had a hand in everything that's going on with GameStop, finally getting called to task about the current situation. So it's not entirely clear what is really going on here, and if there is maybe some cover being provided for some shorts, or if Ryan Cohen is trying to provide cover saying, hey, we didn't want a meltdown of the entire financial system, because that wouldn't be good for us or anybody, and so we are in a position to capitalize on it, but we don't necessarily want it to occur. But this situation that occurred, where you see the stock run up from like look at this, from that to here. Like that's not a small change at all. That's pretty big of a run up, you know. And so, well, actually, I think I said, yeah, okay. So anyway,
Yeah, $10 to $25 after the spike. I also think that sort of the retribution that somebody who was looking for MOASS, I think you're right in saying it's not going to be good for the broader ecosystem for that level of I don't know, a collapse to occur. So perhaps GameStop is looking at it, or Ryan Cohen is looking at it and saying, we have leveled the playing field to some degree. We are seeing changes in the institutions, in the finance world. You know, look also at the location of GameStop being in Grapevine, being in Dallas. We do know that that there is a new stock exchange that is going to have settlement on blockchain that is being built in Dallas as we speak. So perhaps they're looking at that as being part of the future.
I don't know about that. I think that that's being built by those who would probably have been traditionally the enemy of GameStop. Like, I think that they were betting against them. Maybe that's turned around. I'm not sure that that's going to be the case, because I think the primary evil villain in this story, who has at least been canonically tied to being one of the evil villains in this story, is the one who's working on that. So I don't think that would be a likely scenario, but who knows? Maybe.
Well, but that narrative of the, I don't know, the arch enemy, et cetera, like at some point it's a system, and you have to play with those players in the system, and that entity, I don't know that they thought the settlement window was ideal. I've certainly seen the CEO talk about it years and years in the past and saying, this is a problem. This is a problem that needs to be fixed. And if you know, again, like you can't, at some point you have to work in reality and play the game. But it looks as if they are, especially with the building of a new exchange and one that settles with blockchain, they are looking to the future and saying, this is something that people want, and we're going to make it.
Possibly. I know that the SEC has made certain moves in the direction of trying to track trading activity and what have you. So this was news that came out this year about the Consolidated Audit Trail. It's funny how many things that we end up talking about on this show that like are CAT acronyms, whether it's OpCat on Bitcoin or CAT on CHWY, or now a Consolidated Audit Trail for stocks and GameStop. This here was an effort which has largely, I think, not produced the results that people had anticipated, but it may have precipitated a lot of that SEC actions which have recently occurred, where they're now dragging people in front of the regulatory bodies and saying, you've been engaging in behavior which was not what was authorized. You're not supposed to be doing this kind of stuff. So it may have been precipitated by this.
I don't know. I'm not. I guess I do remember the discussions about the Consolidated Audit Trail, but also with CAT, as you mentioned that, I kept thinking perhaps cats, as mentioned in the debates, is a metaphor for other things, but probably not. We do talk a lot about cats. The settlement issue going on in the stock market right now is to me one of the greatest problems. I mean, we used to see the settlement issue in banks and how it was abused. that got closed down in what, the late 90s. That's sort of the narrative. So one of the narratives of banking through the early 2000s. They turned to fees. They've made more money on fees, even though that they complained that was more problematic. I don't know this. When we got in earlier in June into what was going on with the settlement of stocks, I was sort of taken aback at at what a problem it is and how it's abused. It seems that if you're in the SEC or in the finance world, people are aware of it and it's a problem. So I don't know. I'm also the most excited about blockchain because taking it out of the consideration of the SEC seems to me to be a better fix. So I don't know. I don't know what to say about GameStop except that it seems to be reading some of these tea leaves and trying to position itself for a big change coming up.
Well, it's still an unresolved situation. It seems like these raises that have occurred have put GameStop into a tremendously strong position. No debt, profitable. Just a lot of good things to say about it. Whether all of this bluster that's happening is the result of new accounts being created, shills, people trying to get retail shook off of this. There's a lot of sentiment that I've stayed with this for a long time. I trusted Ryan Cohen. I'm going to keep doing it. That's overwhelmingly a narrative that's out there as well. So it's hard to say what's really going to happen, but I would say this situation is not over. It's far from over, and I don't understand how GameStop could possibly say they were going to sell 1 billion shares if there wasn't the possibility of them selling 1 billion shares. And if that gives you any indication of what's going on here, then it seems to me that there's at least $1 billion worth of appetite for buying these shares, and there's no way that's coming from retail. There just is not enough retail money that is out there to buy up 1 billion shares of GameStop. So who's going to buy it? It's got to be the shorts closing. So if that gives you any indication of what these guys might have some access to, because they think that that's actually possible, then you've got to ask who exactly is going to be buying those shares, and then what does that mean for what GameStop ultimately ends up being worth and whether it's a good investment. You got to kind of do your own research and do your own math, but it's an interesting situation for sure that does not seem to be resolved. I mean, and every time we do a show, I think that that's kind of my conclusion on this, is that this situation isn't resolved, and it'll be fun to see Ian Carroll's Bear Trap movie come out, which I don't think we don't mention that enough. I gotta plug it, because I don't think Dumb Money did the situation justice, and they're hoping to do better on that. And maybe we can check up and see what's going on with the Bear Trap.
Are there any other narratives or companies that you've been following that come close to exposing the shorting issue, exposing the settlement issue? Is this happening anywhere else to a lesser extent, or is GameStop really driving this narrative, driving this attention?
I really can't think of any right off the top of my head. It's a little unprecedented in financial history that people have been saying that this really hasn't ever happened like this before. That somebody turned around a company that was trying to be shorted into oblivion. There's just been so many that have gone the other direction, and this is one of the few times where it seems like it's not going the way that traditionally has happened, which is you find a company that's kind of on its way out, you destroy it through some means, and we've seen this in recent time, even with the companies like Red Lobster, where private equity comes in, and it sure looks like it wasn't the result of them selling too much shrimp that caused that to happen, but rather it was private equity coming in and doing what private equity normally does, which is to gut the company of all of its assets, bet against it, short it into oblivion, let that thing declare bankruptcy, and then walk away with all the money. which has happened to Bed Bath and Beyond, which happened to a variety of brick and mortar retailers, and happened with this restaurant chain. And they tried to do it to GameStop. And if you look at other companies where this has occurred, the only other one that really comes to mind that I can remember was Tesla. And Tesla was kind of the playbook for this, because there was a massive bet against Tesla, and rightfully so, because there's never been a car company, a US car company, that's been started in a really long time. They all failed. And it looked like Tesla was just going to join them. But sort of this same type of situation happened where retail got behind the company, backed it, bet against the shorts, and they turned it around, and it became a massive success because of the way that they were able to turn the cash position around. So I guess to answer the question, like, has this ever happened before in recent, I would say Tesla is still that poster child that I would point to, that something similar occurred.
And we've talked about retail investors versus private equity. You bring up private equity, and this to me is also, I guess, the other part of the equation that we haven't talked about. Private equity loves, when I was talking about, again, cheap money, cheap debt, private equity lives and loves that. But private equity is, to me, part of a problem in that it is one thing to live in a world where there are businesses who are looking for inefficient companies and going to go break them up and sell them for parts, or to figure out a better business model. But when I look at what private equity has become, when I think about what they've done with the likes of Bed Bath and Beyond, I don't know what happened to AMC, but private equity seems to get its hands into all sorts of Toys R Us, any number of businesses, and it doesn't seem to be coming up with better business models. It seems to be breaking them up and making them cannibalistic, by selling off the actual brick and mortar businesses and renting them back to the company, and sucking all of the money off of the investors and out of one company, and making off of that cash. So,
well, actually, that's a good point that you brought up. Like, AMC is in maybe a similar type of situation, although people have said they're not that similar because of the way that GameStop had the amount of short interest that it had had at one point, that they weren't really apples to apples comparisons. But certainly AMC has gone through similar types of things where they've issued a massive amount of new shares. They've managed to turn their business around largely because of the weird situation that occurred where there were bets that were placed against the short sellers, and that managed to turn the company around in some sense. And the stock price of AMC and GameStop still track each other down, whether they're correlated, whether they have similar bets against them or for them. That might be part of what's going on there, but it would be maybe another one that easily comes to mind that is thought about. There have been other weird situations that have happened. I think recently there was price action on COS, which was very, very weird. Like, it's a stock that should not have had the kind of price action that it did. And so there have definitely been really weird things that have been going on in the stock market. And it seems like, some of this is related to just the shenanigans that are enabled by having the market makers and whatever other players have these powers to be able to create shares synthetically that they've traditionally had in the past to aid settlement, but that now seems to just be being abused to do these other nefarious types of actions to destroy companies.
Something else that could be going on is the private equity firms are turning their eyes again towards like tech sector firms that have been performing so well: Amazon, Google, Apple, Nvidia. Because again, we've seen the government talking about antitrust regulations, and also probably possible unrealistic expectations with
almost every single one of those companies is in some sort of legal trouble, right? We saw Apple's double Irish getting shut down. I think you're the one that pointed that one out
Oh
to me.
yes, yeah.
Then we have Nvidia, that there were rumors that there was some kind of a DOJ action against them, which turned out to be false. That one's a weird one. Don't know which way it actually is. But Nancy Pelosi, I think, got out of Nvidia. So if you're following the best stock trader of all time, she's no longer participating in that one. Kind of made off with all the money she was going to make. And the insiders at Nvidia have been selling like crazy, which is different from what's happening at GameStop. Like, no insiders have been selling on GameStop, and usually they've been acquiring additional shares. Now there's some nuance there, because I think some people had some tax situations occur where they had to sell some, but like most of the people that are insiders at GameStop haven't been selling. But the top people, including the CEO at Nvidia, have been selling off, and then we've got Google that is now being looked at for an antitrust violation through the DOJ, I believe, right? So yeah, all the big tech firms seem to be in some sort of legal trouble, or going through various different enforcement actions against them.
There's also the I saw that the NFL owners voted to allow some private equity firms to buy 10% of the NFL, and that really caught my eye too, because we haven't seen I hadn't seen private equity, so I had seen it traditionally, or for the last several years, aimed at businesses that were affected by the internet, the internet bubble, and all of these brick and mortars, Barnes and Noble, um, the all of the old familiar names that we knew from walking up and down the mall. And so perhaps they are beginning to look at, and there's also, going back to the politics of what's going on in this election, and the a change in how the world operates. If the dollar is no longer the denominator for the world's currencies and their options, I think that we are definitely going to see some sort of return to manufacturing. We might not have as good of options in goods here in the United States, or as cheap of options, but that's going to change the businesses that are what's possible for businesses to be profitable here. So maybe again, they're looking at not just the business model of GameStop, but as you put it, or as you pointed out, the character of the investors in that company too, and saying there's a bunch of diehard people here. There's a different kind of institutional investor in companies that have been much more stable in the past, but are about to be shaken up. So,
we're certainly in a world of some of the most expensive money that we've seen in a long time. The yen carry trade still seems to be unwinding. Like, that situation, if you're not tracking it, the yen is still going through the cycle that everyone had feared. So the margin calls and whatever other types of loan and weird shenanigans that was happening when they were able to borrow at zero against Japanese yen and go put that money to work in much more lucrative markets still seems to be going in the wrong direction from what people had hoped it would, which is to keep the yen very weak. It seems to continuously be gaining strength, which is not what anybody had wanted when they're operating in the carry trade. And then you've got the Federal Reserve in the United States, which has kept rates high, which means money is at a premium right now. It's the hardest it's been to get money to do M&As and whatever else. And so if you look at a strategy like what GameStop is doing, where they're raising a massive amount of money, that really would have put them into a pretty precarious situation if they had tried to borrow it. So raising it the way they've done has put them into this class of being able to buy things that many other companies will not be able to mimic that, given their cash situation.
well, and who knows what well, we also have Congress talking about a continuing resolution for funding the government too, which would be creating more debt to be monetized. I I know that a lot of investors, or probably almost all investors, are looking for cheaper rates from the Federal Reserve, um, cheaper interest rates. But I think that
Yeah, but
is
even those cheaper interest rates are not talking about cutting 2 or 3 points. They're talking about cutting a quarter point or something. We're still at like,
well, and yeah, you mentioned, you say like it's expensive money right now, but I mean, the Central Bank of Argentina, the rate is at 40%, and we're at 5. So you know,
it's all relative. We've been living with relatively cheap money for a long time. Like we have had really low interest rates, and that precipitated everything from people being able to get mortgages at 2.5%. Like that kind of thing is just not on the horizon again anytime soon. Like I don't foresee the era of super cheap money like what we experienced during that decade coming back anytime soon. Like the rate cuts that will occur over the next 6 to 18 months is not going to be 3 percentage points to get us back to something like that. Like if they do rate cuts, it'll be a quarter point here, a quarter point there, and we're going to be living under this expensive money for quite some time. I just don't see any one or any analyst who's saying the return to cheap money is going to come back. And again, you're right. It's not throughout the entire world, but in the United States, this is a situation that we haven't seen in quite some time. It's been a long time since we've seen interest rates this high.
well, and I've also seen I've seen this affecting the real estate markets. Very low home sales, and meanwhile,
Yeah, because who wants to get settled with a 7 to 10% mortgage rate?
well, but when I look at the, this is also something that Trump and Harris both talked about a little bit and have talked about in their plans, but they seem to want to create more government debt to give what, $25,000, $6,000 to first home buyers. Um, Meanwhile,
There's no authority for the president to do that. That would have to be Congress, right? I mean, there's no way Congress would have that.
no, the department, well, it's actually how they structure it. But no, the Department of Agricultural has a lot of first-time home buyers, but what they do is they rob you from the future. But they give you a loan, and you have to pay it back when you sell the house in the future. But what that does is allow the prices of homes to continue to rise, so that the tax base for especially the local and state governments continues to rise too.
Wait, so you're saying what Kamala has said she would do for first-time home buyers or whatever, like that $25,000? You're saying that the programs are already authorized and they're in existence?
Oh yeah, absolutely. Go to the USDA, and it might seem weird that HUD is under the USDA, but a lot of these programs started because of aid to rural houses. And as we play with interest rates with the Federal Reserve, the velocity of money is very important. And when you live in a city, a dollar might exchange hands, 100 times in a day. But when you live in a rural area, and think about how this also correlates to homes, like when you're evaluating the value of the home according to the comparables of all the sales that have occurred around it, when you sell a lot more homes, the price goes up a lot more quickly. And because that happened, it was important to provide incentive, or to provide cash for rural areas so that they could catch up with the rest of the country. And so the USDA has a couple of different programs for helping people, buy houses, and they give you money now. And the deal is that you have to pay the money back to them when you sell the house in the future. So they rob you from the future, but it creates money now. If you think about how that's working, and it creates money for the government and for the whole system immediately. And so that's how that program would probably be carried out.
Yeah, it's a big part of the economy is just making sure that velocity of money keeps happening, because everybody's getting a little piece every time a transaction or money changes hands. So it's important that they keep the money flowing through the economy and between hands, because if everybody just sits tight, then everything comes to a crashing halt. Anyway, This has been interesting discussion. It's been a while since we've looked at what's really happening with GameStop. I think it's been a few months since we've looked at it, so it's fun to take a look at it. And if there are new developments, we'll take another look. But as of this point, I'd have to say that my opinion is that the title of this space is wrong. I don't think it's a rug, but certainly some weird stuff that's going on here. But I don't think anything that they've done is rugging the stock particularly. It seems like they're building a fantastic cash position, and what they end up doing with it will ultimately determine the success of the company.
It needs a semicolon, and then to say it really ties the room together.
Nice. All right. Well, we'll talk tomorrow.
All right. See you tomorrow.